7.2 million Americans are unemployed right now, and the jobs report this week said things are getting better. Let's decode this together. The March jobs report dropped, and on the surface, it looked pretty solid. The U.S. economy added 178,000 jobs last month. The unemployment rate, which is the percentage of people actively looking for work who can't find it, ticked down to 4.3%. Most headlines called it a good report. Some called it a strong one. But here's the thing. When you look past the top-line numbers, the picture gets a lot more complicated. And for the average household trying to figure out whether their job is safe, whether a raise is coming, or whether now's a good time to make a move, the details matter way more than the headline. So let's get into what this report actually says, why economists are calling it mixed, and what it means for your paycheck this month. To understand why this one's tricky, we need to talk about how jobs reports actually work, because most coverage just skips this part entirely. The Bureau of Labor Statistics, which is the government agency that publishes this data every month, surveys hundreds of thousands of households and businesses. They count how many people are working, how many are looking, and how much people are getting paid. That last number is called wage growth, and we'll come back to it because it's honestly one of the most important numbers in this entire report for your actual wallet. Here's what made March complicated. A big chunk of those 178,000 jobs came from a rebound in specific industries, meaning those sectors had dipped in prior months and just bounced back. That's not the same as new, broad-based hiring happening across the whole economy. Think of it like a grocery store restocking shelves after a shortage. The shelves look full again, but that doesn't mean the store is suddenly busier than ever. On top of that, previous months were revised lower. Revisions are when the government goes back and corrects earlier job counts after getting better data. When revisions go down, it means the job market over the past few months was actually weaker than it looked at the time. So even as March looked decent on paper, the months before it got quietly walked back. Nobody really covers that part. And here's the number that deserves way more attention than it gets. 7.2 million people in this country are currently unemployed. That's not a footnote. That's the real human count behind the percentage. And it's 7.2 million households asking the same question right now. How do we cover rent this month? So why does a jobs report ripple out beyond just the people counting paychecks? Because employment is the engine of the entire economy. And when that engine stutters, everything downstream feels it. Start with wages. The report showed wage growth slowed to 0.2% month over month and 3.5% year over year. That second number sounds okay until you put it next to where inflation has been sitting. If prices are rising faster than your paycheck is effectively shrinking in real terms, even if the dollar amount on your stub technically went up. It's a quiet pay cut that most people don't even notice until they're standing at the checkout line wondering why the cart feels lighter. We've all been there. Then there's the Federal Reserve. The Fed, which is the central bank that controls interest rates, has been trying to figure out whether the economy is strong enough to hold rates steady or whether it needs to start cutting. A messy report like this one makes that call harder. And interest rates aren't just a news story. They affect your mortgage, your car loan, your credit card balance, and your student loan payments. When the Fed moves, every borrowing cost in America moves with it. Third, hiring decisions at companies follow the mood of the labor market. When businesses see a report like this one, decent headline but soft details, they tend to slow down on new hiring and get cautious on raises. That won't make the front page, but it will show up in your next performance review conversation, or in how long it takes to hear back on a job application. Let's bring this all the way home. Say you're a household earning $75,000 a year combined. Your rent is $2,000 a month. Your car payment is $520. Groceries run about $800 a month. That's over $3,300 in fixed and near-fixed costs before utilities, subscriptions, or anything unexpected. You're not living recklessly. You're living the average American life. Here's the before and after that should get your attention. 2 years ago, when wage growth was running above 5% in many industries, a household earning $75,000 was seeing roughly $3,750 more per year. That's about $312 extra per month, enough to cover a grocery run or knock down a credit card balance. Now wage growth is running at 3.5% annually. On that same income, that's $2,625 more per year, or about $219 per month. That's a $93 monthly difference compared to 2 years ago. And if your rent went up, your insurance went up, and your grocery bill went up, that $93 gap is exactly why the paycheck feels tighter even when you technically got a raise. This is why a mixed jobs report matters to a household that isn't losing a job and isn't actively applying for one right now. The slow erosion of wage growth isn't dramatic. It doesn't make headlines, but it compounds quietly, month after month, until one day you're working just as hard and somehow saving less. Here's one concrete thing you can do this week. Pull up your last 3 pay stubs. They might be in your email, your employer's HR portal, or somewhere in a folder you haven't opened in a while. Look at your gross pay, which is your income before taxes are taken out. Compare month over month. If you haven't had a raise in 12 months, that's worth a conversation with your manager. And if you're job hunting right now, look specifically at healthcare and service sectors. Those areas showed relative strength in this report, while other industries were flat or declining. 3 things worth keeping an eye on over the next 30 to 60 days. First, watch for the April jobs report. It drops in early May. If we see another month of below expectation numbers or further downward revisions, that's the signal that this slowdown is real and not just a 1-month blip. You can set a free alert right now. Search BLS Jobs Report Date on Google, and you'll have it in under a minute. Second, watch wage growth in your specific industry. The national average is one number, but your industry might be running hotter or colder. Tech and real estate have seen tighter hiring than average. Healthcare, hospitality, and logistics have held up better. The Bureau of Labor Statistics publishes industry-level data at bls.gov, completely free, no login required, and it takes about 5 minutes to find the breakdown for your sector. Third, watch what the Federal Reserve says at its next meeting. Fed officials have been careful not to commit to rate cuts, and a report like this one gives them more reason to wait. If they hold rates steady again, that means mortgage rates stay elevated, auto loan rates stay elevated, and any floating rate debt on your credit cards stays elevated too. Here's the one thing to take away from this week. A headline number is not your number. The jobs report said 178,000 jobs and a 4.3% unemployment rate. What it didn't say loudly enough is that wage growth is slowing. Prior months got revised lower, and 7.2 million people are still looking for work. The headline is the average. Your financial life is not the average. So this week, do one of 2 things. Either check your last 3 pay stubs to make sure your wages are keeping pace, or update your resume by 1 page so that if the labor market does soften further, you're not starting from scratch. Both take under 30 minutes. Both change your position. Quick reminder, everything we cover on Money Decoded is for educational purposes only. None of this is financial advice, and we're not licensed financial advisors. Before you make any money moves, do your own research and talk to someone who knows your specific situation. If this was useful, hit subscribe. We do this every week. That's the Decode for this week. We'll see you in the next one.